Minutes to strike the last word.
Thank you, Mr. Chairman, and I want to also express my strong opposition to my good friend, the gentlelady from New York's legislation. I know her heart is in the right place and it's well-intentioned, but I do not agree with the premise of this bill, H.R. 4277, the Overdraft Protection Act. I think the bill, respectfully, should be renamed Making Overdraft Protection Unaffordable Act, or even worse, the Overdraft Protection Elimination Act, because that's the effect of this bill. And I want to just say up front, consumers generally, by and large, know exactly what this product is, and they want it. There is a massive demand for it. This idea that this is a product that is worse or more usurious than payday loans is laughable. If you want to push more people into unaffordable payday products, this bill is the way to do it. You will have more uptake of payday loans, which my friends on the other side of the aisle say they hate payday loans, predatory lenders. This is a recipe for more payday loans. This is a recipe for more predatory loans. Overdraft protection is what Americans want. They don't want their card declined. They don't want the embarrassment at the point of sale of not having the transaction honored, and so they elect, and this is an important point that my friends on the other side of the aisle are not disclosing to the American people who are watching this right now. These consumers elect. They voluntarily choose overdraft protection. This bill would totally upend that framework, that disclosure framework, which was established in 2010, established by the Fed when they amended Reg E to require customers to opt in for overdraft protection. And this opt-in process involves clear pre-election disclosures and the ability to opt out. This bill would eliminate that consumer choice and replace it with a government mandate. This is an innovative product. Customers under current law knowingly opt in to receive the emergency safety net that overdraft provides. And for many, this is a financial cushion. I have heard firsthand from Kentuckians about their experiences with bank accounts and overdraft fees, and I think it's important to speak about these cases directly and not think about this in the abstract. My constituent, a young mother in Kentucky whose husband was in the military and deployed, had an emergency. Her car broke down, and she needed it for work. She had to pay for the car repair, but forgot that she didn't have sufficient funds in her checking account. The overdraft protection on that account that she chose, that she voluntarily elected so she wouldn't have to go to a high-cost payday loan, that protection on that account allowed her to address her emergency. She relayed that the fee that she paid was worth the convenience. It was worth the emergency coverage in that circumstance. I've heard many other stories similar to this one. So if we implement this policy, we will potentially eliminate the option for overdraft funds, and we are leaving everyday Americans like my constituent, the wife of a service member, in situations where they may not be able to access short-term liquidity that they rely on as a safety net. And in addition to the benefit of funding options for consumers, overdraft has found to be an innovative product. The study that my colleague from Missouri, Mr. Luchtemeier, pointed out, this Curinos study, found that most consumers are fully aware of the cost associated with tapping into these overdraft coverages and affirmatively chose to use this low-cost option in lieu of a payday loan because it was less expensive to cover the temporary funding shortfall. So let's not eliminate the ability of banks to offer overdraft. We should allow the market demand to incentivize banks to offer products that fit the needs of their customers. And final point, I don't want to hear any of this nonsense anymore from my friends on the other side of the aisle that, oh, well, we like community banks. We just don't like the big banks. We don't like the Wall Street banks. Let me tell you who can deal with this bill. I'll tell you who can deal with this bill, the global banks on Wall Street. They can afford this bill. And look, my friend from New York, she represents those banks. There's nothing wrong with those banks. They serve a purpose in that segment of the market. And I appreciate her advocacy for those large institutions. But you know who cannot afford this legislation? The small community bank with $250 million in assets on the corner of downtown Mount Sterling, Kentucky. They will eliminate this product. And my constituents in Mount Sterling and in Winchester and in Paris, Kentucky, and in Nicholasville, Kentucky, and Lawrenceburg, Kentucky, you know what will be left for them when they have a cash shortfall? A high-cost payday loan. So no more am I going to tolerate hearing from the other side of the aisle, oh, well, we're for the community banks, because this is a killer for community banks and their small-town customers. I yield back.